how he's looking at markets. Kashyap, great having you. Give us a sense. What are you advising your customers, investors right now?
So, what we are advising our investors generally is that this kind of corrections which happened in the month of March ideally could have been used for, making a fresh entry into the market. If they wanted to top up, they should have ideally done that. And April has been quite positive for us. So the portfolios or the strategies have given a significant amount of returns in the month of April. I think this kind of turbulent times where you probably have something like a war or any kind of sort of, a bit of black swan event. We always advise our clients to use that volatility to their advantage. If they are sitting on the sidelines, maybe they could, put in more money into the market, and fresh positions ideally can be initiated in this kind of volatile times.
Where should those fresh positions be initiated? In what sector, segments, pockets are you liking?
So we continue to remain bullish or quite positive on within the market on auto ancillaries. That's where we have put in some bit of more money. We remain quite positive on the capital goods side. Incrementally, if I look at overall market, private banks are looking quite positive given the valuations have derated meaningfully. A lot of fears regarding the margins or in terms of asset quality have not materialized, and we do believe that in terms of asset quality for at least medium, slightly medium term future, we are not going to see any negative coming from the asset quality side. So private banks is one space where we are quite bullish on. The fourth segment where we are quite bullish on is within pharma, contract manufacturing, including contract development and manufacturing. That's something that we are quite happy to put our money into.
And within contract manufacturing, could you give us some names at all? Are you allowed to talk about certain specific stocks that you're liking?
Not really, but
okay.
I would say that, there are this, without giving out names, these are the large names in CDMO segment or in contract manufacturing segments. Most of them are leader in this particular sector. That's where I would probably leave.
Okay. All right. And with regard to infra, Kashyap, I wonder if you have a specific preference within that infra basket, and could valuations there look good from a risk-reward standpoint?
So I think overall infra, our exposure is quite limited given that, the cyclicality on the businesses is quite high. And the second part is that for most of the players, the end consumer is usually either government or a government-owned entity. But I would say that, given the government's push to the overall infrastructure and the fact that it's now getting even more and more decentralized in the sense that state governments are also participating in infrastructure creation quite aggressively. Even at local levels, the authorities are quite getting aggressive in terms of infrastructure push. That's one segment where, probably a lot of order intake would continue. But like I said, we have stayed away from it given the fact that largely there is, probably one end user sector for them, for those companies. And we have very little exposure, particularly to the infrastructure space.
Power? Would you at all have exposure there? And how would you play power as a theme?
We do have exposure to power, but in a different way, in the sense that our exposure to utilities is not very high. It's very limited. But there are other ways to look at power sector as such. So I could invest in companies which are probably the suppliers of components or supplier of equipment to those companies, where there is significant amount of lesser risk in terms of whether you could look at in terms of tying up the raw material or tying up in terms of selling the power to utilities. These are the companies which are also quite strong on their cash flows and the balance sheet management. So we do have exposure to power, but it's more indirect than directly to the utilities. But yeah, we do have exposure indirectly to the companies which supply components or equipment to some of these companies.
Everything that's playing out in the global marketplace, Kashyap, how are you viewing the risk of West Asia on India earnings if things were not to get resolved? Is there a risk there to your thesis that you go out and buy, it's a good time?
So I think if you look at near term, Q4 numbers particularly, I think about if I look at Nifty 500 or Nifty mid cap 150, about 60-65% of the market cap has already declared numbers. April numbers, so far as the numbers which have already come in, I don't think they have been in a sense bearing any brunt of West Asia crisis as yet. But our conversation with a lot of companies during the month of April and towards actually May suggests that supply side now is getting more and more constrained, both in terms of supplies as well as in terms of pricing of the raw material also. So I think Q1 is going to bear some bit of brunt of those elevated raw material costs or supply side constant as such. But like I said, if you go back in the history, I mean, Russia and Ukraine war started exactly around towards the last week of February 2022. If you look at crude oil prices, they peaked out during the June 2022 month. From June 2022, those prices only went down. As and when this West Asia crisis, it gets resolved, and we see the opening of the Strait of Hormuz, which all of us are waiting with our bated breaths to open up. A lot of these fears will get dissipated, right? So they will disappear. If you look at the generally earnings post September and December 2022 quarter, in that period, we could see sort of quite handsome earnings bounce back that came in at that point of time. I think similar playbook should play out. You will see some weaker numbers coming in Q1. I think it's a fait accompli. A lot of people have that idea that Q1 has seen a supply constraint. It has seen raw material price increases, something that will have to be passed on to their own customers. Our conversation with a lot of companies suggests that the conversations are already on, and partial price hikes have already been rolled over to the customers. Not to the fullest extent, but a part of that price increase has already been passed on. But I would say that if there's West Asia crisis, as it gets resolved, I think things should come back to normal. We don't have an idea about when that will happen, but probably if the sand mines prevail, that should happen sooner than later. And that's when I think you will see market taking some bit of fresh air out of it, and you will see market moving as the earnings also move. In the meanwhile, this volatility, like we did in June 2022 quarter also, that volatility ideally can be used to put in more money in the market. It's volatility is always a friend of an investor if you use it rightly.
Okay, Kashyap, going to have to close this conversation for the moment. Thank you so much for coming in and speaking to us, giving us those views.